Hi, welcome to the trade on this Wednesday morning. Well, Iran has said that it will not meet with top U.S. envoys who flew to the region following an outbreak of hostilities, dimming the prospects for a lasting peace between the two countries. Jared Kushner and envoy Steve Witkoff arrived in Doha for what the White House described as high-level talks. Meanwhile, Iranian officials have insisted that the regime will maintain control of the Strait of Hormuz along with U.S. ally Oman, saying they will impose tolls in mid-August when the 60-day period expires. On the data front in the U.S., consumer confidence rose slightly, while job openings in May rose marginally against expectations of a decline. U.S. 10-year Treasury yield up to 4.43%. The Aussie 3-year government bond yields rose to 4.38%, the 10-year at 4.78%. U.S. dollar index is down by 0.2%, the Aussie trading at 69 U.S. Chris Weston from Pepperstone joining us with the charts that matter to him. Hey, Westy, it's been a while. Nice to see you. Look, we are in a new financial year. We had one of my previous guests described it as fireworks for the Nasdaq, fittingly, to end the financial year. Can it continue? Can we see, a resumption of the upward trend after that consolidation?
Well, I wouldn't be betting against it at this stage. Whether we go into the new financial year and money decides to change, we did see some conjecture last couple of weeks, people rotating into other areas away from AI, all parts of AI, to be honest. And, that wasn't just a US phenomenon, that was across Korea and Japan, where there's obviously very high tech, concentrations of weighting. So, but it seems to have found its mojo again. People window dressing it up into the end of the quarter, end of the month, and end of the financial year, and it's put in an absolute breathtaking move. I think it was, the Nasdaq 100 was up to 20%, 27% for the quarter, which you'd take every day, to be honest. But the earnings have been ratcheted up across tech and across other areas, which have been a really strong tailwind. We've got margins at the moment, I think, pretty much at record levels, which is in some ways probably bad for economics because what you're seeing is an inflationary shift largely on the memory side. So, but earnings have been a massive tailwind for US equities and tech in particular. And obviously we're going to come into the next earnings season in mid-July with JPMorgan kicking things off, and we'll have to see once again whether or not these companies can meet those lofty expectations and can continue to see this kick. But there is a bit more sort of conjecture going into the data center trade at the moment, and the word bubble seems to be coming up a bit more again, and that sort of needs to reconcile itself again. But as you can see from the chart, we're pushing sort of downtrend resistance. Can we make it do all-time highs? Obviously the price will tell us that situation, but at the moment markets are moving up. We're down a little bit on the early starts of the day in Nasdaq futures, but if this chart can break those resistance levels and kick into new highs, then I'm certainly one to be chasing this at the moment. So a lot of conjecture around the bubbles forming in the AI. It's been the case for a while. A lot of concern that maybe China could be the issue with a lot of really good quality open sourced large language models being pushed out. But at the moment the market is closing out the quarter and has closed out the quarter and starting the new one with very high expectations here.
Cheaper too when it comes to Chinese AI, I guess, unsurprisingly. I read a really interesting piece in the New York Times this morning about how China is actually working really hard to also address some of the social concerns, some of the job loss concerns that are coming along with AI, and they're just miles ahead of what's happening in the rest of the world on that front as well.
But it's a fascinating space because of the US-China sort of say trade war, but the AI dominance war to 2030, and everyone's focused on the massive levels of capex in the US. But I think China's going about its business very quietly behind the scenes, and doing some really good things on the AI front, which is definitely worth looking at.
All right, I digress though, as per usual. I spoke with a guest, one of your competitors, in fact, earlier today, and he reckons that with the Japanese yen at around 40-year lows versus the USD, Friday, while Independence Day is on, while markets, are closed in the U.S., that would be a really good session for Tokyo to intervene in the currency market. More bang for their buck, he said. Do you agree?
I'm not sure who you're talking to, but I'm sure. I do echo those comments. That's kind of where they've had some success has been in the sort of the twilight zone, so to speak, that rollover between the US and Asia, and that sort of illiquid period has caused some big moves to the downside. But yeah, I mean, go home, get a ball, stick it underwater, and let it pop back up. I mean, that's really all that you're going to do. The Bank of Japan, the Ministry of Finance in particular, are really just fighting a whole heap of negative forces which are against them. And so we heard from the finance minister yesterday, who said that, yeah, they'll take the right steps with regards to the currency, because they know, every single time they come out and intervene. Last time they did it was on the 30th of April. What was it? 11.7 trillion yen, probably one of the biggest they've ever done. Yeah, it fell 500 pips, took 35 days to come back up. We're expecting exactly the same. The market knows when you're fighting a massive wall of carry, everyone wants carry at the moment. Income in FX is killing it for the fourth year in a row. Mexican peso, Colombian peso, Brazilian real, just fill your boots with those, and you sell the yen to fund it, and effectively you get then a momentum trade which pushes it higher, which is exactly what you're seeing from that chart. Yeah, the dollar's caught in that space as well. They're fighting that. They're also fighting capital flows from Japan. Outbound investment is at a 5-year high, all-time high, should we say, and that's largely unhedged flows. We know, there's a credibility issue at the Bank of Japan. So the Bank of Japan, the Ministry of Finance more particular, can come out once again. They can do it in this illiquid time, potentially around that, the Independence Day holiday. Yeah, they'd cause a 5, maybe 600 point rip to the downside, given that period. And I think everyone will just sit there and go, this doesn't work. Unilateral action from the Ministry of Finance doesn't work when you're fighting a stronger US dollar, when you're fighting a yen carry trade move. Doesn't work. So it needs to be coordinated, and everyone will just be buying up again. So yeah, I agree with whoever said that they'll cause a bigger move on that day, but I think everyone will be sitting there just waiting to buy that move straight away.
Yeah, beach ball underwater. I like that, Chris.
Yeah, that's
the way
right,
to paint a picture. So when it comes to oil, I just detailed the fact that these peace negotiations are on off. It sounds as if, contrary to what was in place before the war, that Iran and Oman will look to charge tolls through the Strait of Hormuz. So my point is there's still lots to go before we see a resolution of this conflict. But Brent crude prices are so cheap right now. Do you think it's a false sort of bottom, if I can call it that it's too cheap for what's still to come?
Well, you can definitely make that argument, for sure. I mean, I think what markets have done is they've looked at the normalization of flows, or some signs of normalization of flows of Hormuz. And we saw yesterday 11 tankers going. There was more on the commercial side, but we're looking very much at the tankers going through left to right, east to west, east to west, west to east. And we saw 11 tankers going through. Some similar sort of numbers that we saw back last week. But still, pre-conflict, we were looking at about 30 tankers a day going through bi-directionally. And so everyone's got really excited that, we are starting to see a gradual increase. But I think at current levels, around $71 in front month Brent, you probably are pricing in a market that is at full normalization. So that speaks to your argument and your point. But I think what you're seeing now is that there is a lot that could go wrong. I mean, we could see those numbers dissipate. I think a lot of shipping companies are still pretty scared and pretty cautious about going through, and they want to see a continued process, a consistency of around sort of 11 to 15 tankers a day before they start going, right, the coast is clear, so to speak, and we can go back in. They're concerned about mines that could potentially still be there or could be there. They're worried about these kind of spot attacks that could come through from militant groups or various factors. But I think the price is certainly reflecting now a full normalization that could come abruptly to a halt at any stage. And that's why we are looking. I think the market is telling you that they are very cautious on this now. And we've seen last 2 days inside bars, below inside Friday's range, as you can see there. I've sort of drawn it with those two sort of horizontal lines, and they're just waiting for the next move to break. And that do we push it back through the gap that we got through on the 28th of February, or do we push this one higher? And that's going to take some sort of tangible effects to say that flow of transport through Hormuz is over. We're just waiting at the moment. So as a trader, what I'm doing is I'm just sitting here, patiently. I don't want to act in this situation. I want to wait for the market to tell me what they're thinking and the collective wisdom in the market to force my hand, and it will take a break either side of that to sort of give me a directional bias. So that's what we're looking at. I'm not going to guess what the flows are going to do through Hormuz. I'm not going to sort of guess the headlines or how people are going to act. I'm just going to wait for the market to jump on board and tell me. And I think that gives me some steer to go through. So yeah, a really interesting sort of setup we're seeing in the crude markets at the moment.
Wonderful. Look, Chris, it's nice to have you join us. Thanks for your insights.
Yeah, thanks, Dean. Take care.
That's the trade. Stay with us. More to come.